Welcome back to the Community Corner podcast, where we explore companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're diving into Lamb Weston Holdings, a leading supplier of frozen potato products, particularly known for its French fries. Lamb Weston operates globally, serving the restaurant and food service industries. We'll explore how behavioral finance influences their strategic decisions, DEI efforts, adaptation to market changes, and how they compare to other companies in the food industry. Let's dive in.
Lamb Weston has established itself as a leader in the frozen potato market, but from a behavioral finance perspective, how do biases like the endowment effect and the sunk cost fallacy influence their decision-making, particularly in pricing and resource allocation?
The endowment effect can play a significant role at Lamb Weston, especially when it comes to their established product lines and market share. The company may overvalue its existing products and market positions, making it reluctant to pivot or innovate even when market conditions change. This can lead to an overemphasis on maintaining the status quo, potentially at the expense of exploring new opportunities. The sunk cost fallacy is another potential influence, where Lamb Weston might continue investing in underperforming products or markets simply because they've already spent considerable resources on them. While this conservative approach can ensure stability, it may also hinder the company's ability to respond to emerging trends or consumer preferences.
This focus on maintaining existing products has certainly contributed to Lamb Weston's stability in the market, appealing to investors who prioritize consistent returns and a strong market presence.
Exactly. Lamb Weston's strength lies in its ability to maintain a dominant position in the frozen potato market. But this also means they need to be mindful of not letting past investments dictate future strategy. Flexibility and willingness to innovate are key to staying competitive in a rapidly evolving food industry.
Let's discuss diversity, equity, and inclusion at Lamb Weston. As a global food supplier, how does DEI intersect with their business strategy, and what can we learn from this through the lens of behavioral finance?
DEI is crucial for Lamb Weston, particularly given the global nature of their operations and the diverse markets they serve. From a behavioral finance perspective, fostering diversity within the company can lead to better decision-making and innovation. A diverse workforce brings a variety of perspectives that can help Lamb Weston better understand and meet the needs of different customer segments. For investors, the company's commitment to DEI can signal a forward-thinking and socially responsible organization, which is increasingly important in today's market. Moreover, strong DEI practices can enhance employee satisfaction and retention, which are critical for maintaining a high level of operational efficiency in the food industry.
Investors are definitely considering DEI as a factor in their decision-making, especially in industries like food production, where understanding diverse consumer preferences is essential for success.
That's right. By embedding DEI into their corporate culture, Lamb Weston not only strengthens its market appeal but also positions itself as a leader in providing products that resonate with a broad and diverse customer base.
Moving on to market adaptation, Lamb Weston operates in a highly competitive food industry. How does the company adapt to changing consumer preferences and market conditions, and how does behavioral finance influence this strategy?
Lamb Weston's ability to adapt to changing market conditions is critical for maintaining its leadership position. From a behavioral finance perspective, the company's approach involves balancing innovation with risk management. They must carefully evaluate new product trends and consumer preferences while ensuring that they don't stray too far from their core competencies. This means being open to innovation but also being cautious about how much they invest in new products or markets that may not align with their traditional strengths. However, the challenge lies in avoiding inertia. where the company might be slow to adapt due to a reliance on past successes or established processes.
This adaptability is key for Lamb Weston, especially as they face competition from both large multinational food companies and smaller, more agile producers. Their ability to stay relevant in the market is essential for their continued success.
Exactly. Lamb Weston's focus on understanding consumer trends and adapting its product offerings accordingly ensures that it remains a strong competitor in the food industry. However, they must continue to evolve and innovate to stay ahead of emerging trends and challenges.
Now, let's compare Lamb Weston to other companies in the food industry, like McCain Foods, General Mills, and Conagra Brands. How do Lamb Weston's behavioral finance dynamics differ?
Lamb Weston's dynamics are often compared to other food industry leaders like McCain Foods, General Mills, and Conagra Brands, particularly in their approach to product innovation and market adaptation. Lamb Weston's emphasis on frozen potato products and its focus on maintaining market leadership appeals to investors looking for stability and consistent returns. McCain Foods, as a direct competitor, shares similar market dynamics but with a broader product range. General Mills and Conagra Brands, while also involved in frozen foods, have more diversified portfolios offering a wider range of products that appeal to a broader audience. Lamb Weston's specialization provides a focused value proposition, but it also means they must excel in this niche to maintain their market position.
And unlike General Mills or Conagra Brands, which have diversified businesses, Lamb Weston's strength lies in its specialization in frozen potato products, allowing it to build deep expertise and a strong market presence.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value. For Lamb Weston, the focus on specialization and market leadership provides a unique value proposition in the food industry.
To sum up, Lamb Weston's approach to business is deeply influenced by behavioral finance principles, whether it's through their risk management strategies, DEI initiatives, or market adaptation. But like all companies, they must navigate the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics offers a clearer picture of what drives Lamb Weston's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arne.
And I'm Nikhil. Stay curious and keep questioning the narratives.
Thank you.